We're now officially in a bear market, and not only that, but we're also officially in a recession. So whenever things start to look gloomy, we would then want to change our focus from growth at all costs to growth while being able to survive. So weed stocks happen to be a very risky thesis to begin with. So we want to think about today, what's the impact of the bear market on weed stocks, in particular the cannabis consumer? Now, the initial reaction to that would be, well, weed stocks are what's called sin stocks. So these have traditionally been very defensive. They tend to perform well even during economic downturns. And when we talk about sin stocks, we're talking about gambling, booze, tobacco, adult entertainment, and now cannabis. So one characteristic of these types of stocks is that they're subject to a great deal of regulatory risk, and cannabis, being illegal at the federal level, is probably the riskiest of the lot. But the reason that these stocks perform well is that people always have money for their vices. So you never meet a smoker that doesn't have money for cigarettes. They'll always have money, and usually they won't switch brands when time gets tough. They'll just pay up. So cigarette markets have brand loyalty rates somewhere around 85 to 90%. And if you're a smoker or you've ever been a smoker, I was a smoker for 20 years, you would know what that means. So I smoked Marlboro Lights, and if those weren't available, I would smoke mediums or sometimes reds. But that was my brand. That's what I smoked. And if I didn't have any cigarettes and I would bum something for somebody and they had a Camel, it just wasn't as satisfying. So cigarette smokers traditionally have strong brand allegiance, and that's why the makers try to capture you at the youngest age possible to get you on their brand. Now, when it comes to drinking, the more time that you spend drinking, the more likely you are to stick with the same thing. So you can see this chart here from Statista, I believe, and it shows that around 40% of American drinkers who've been at it for 10 years or more stick to the same brand. So the question we have is, well, what about cannabis? And what the findings show here are that cannabis users are particularly price sensitive, especially heavy users. So a handful of users consume most of the marijuana used in the US. 2/3 of all smokers smoke daily. And you can see this interesting metric here. This was a study done over a decade. It was a huge study, and it looked at drug use in America. And Americans of all ages with a household income of less than $20,000 a year accounted for 29% of all marijuana use and 27% of all cigarette use. Think about how, if you're making that level of money, what percentage of your income is going into your addictions. And this study was released in 2016, and it also looked at the overall population. So this group of individuals that make very little money accounted for a significant portion of marijuana and cigarettes, but only 13% of all alcohol use, and they represent about 19% of the total adult population. And this speaks to the old adage that says, sell to the poor, live with the rich, sell to the rich, live with the poor. So these types of individuals will be very price sensitive. That means that when prices go up or things get tough, they're going to, so their income may go down, right? They're going to keep smoking the same levels that they were, but they're going to find cheaper substitutes. And I'll give you a good example of that. So let's talk about edibles. Edibles are simply cannabis infused food products. Okay. They make up about 13% of the cannabis market, and their growth is outpacing other categories. And surprisingly, gummies are the leading edible at 60% market share for edibles. So, um, benchmark for edibles is typically $10 to $15 for 10 doses. That's 100 milligrams. So when I go into a dispensary, that's about the price that I want to pay. That works out to be about $1 to $1.50 per dose. Well, if you talk to the guys behind the counter, if you're somebody that is price sensitive and you've done your research, you'll know about something called Rick Simpson oil, or RSO. And most dispensaries, all dispensaries I've been in, carry this. And it used to be quite cheap. I remember when it was somewhere around $12 to $15. Now it's more around the 24 to 36 range. I'd say probably $24 on average. It's a vial, and you can see in this picture here what it looks like. It's certainly something you don't want to just have laying around in your vehicle or anywhere where someone might see it, because they might take that for being some smack. But this is 1,000 milligrams of THC, 100 doses for $24. That's about 24 cents a dose. So when you talk to people who consume edibles and don't have a lot of income, this is the sort of avenue that they'll go down instead of paying for the expensive edibles. And I can tell you the price has gone up significantly, and it's more like $20 to $30. So you're paying $2 to $3 a dose. You can have the same dose for pennies. Just buy a packet of gummy bears, squeeze some RSO on it, stick it in your gob, and enjoy the savings. So this is an example of how people will look to cut their expenditures when times get tough, but stick to their same habits. And perhaps one of the biggest threats to the cannabis industry, this is remarkable. So the black market has been going on in the United States for a long time. And back in the day when I worked in restaurants, I was quite familiar with it and deeply involved in the black market, such that I understood it very well. The supply chains have been there. So it's all based on connections. This isn't some guy with his pants sagging on the street corner. These are usually blue collar workers. Lots of people in restaurants dabble, and they have their own supply chain. And you have your growers, and then you have your middle level distributors. So you usually have the grower with the plants, and they'll usually push to someone who then takes it down to the pound level, and then you can sell at the pound level to the guys that are actually selling the bags. And your typical consumer is a regular purchaser, a blue collar individual that comes by at fixed times. It's all based on trust. It's all been there, and it works remarkably well under the radar. It's $100 billion market in the United States. And now that cannabis is being legalized, it's posing a problem to legal cannabis. So this is a phenomenal piece by KQED on California's marijuana economy threatened by growing illegal market. So the growers in California, remember, this is the oldest state in the United States that's had cannabis legalized. They started out medical, then they were the first to go recreational. And they're saying it's virtually impossible for growers to turn a profit because wholesale prices for cannabis have plunged as much as 70%. That's because when it was legalized, everybody that knew how to grow decided to start growing legally, applied for license, and there was a huge surge in supply. And also taxes approach 50% in some areas. So customers are now finding far better deals in the thriving underground marketplace. And I can tell you with a very high degree of certainty that a lot of the strains on the black market are not found in dispensaries. I'm not sure why that is, and nobody I've talked to has been able to explain that, but you can get some amazing strains in the black market that just don't exist in dispensaries. And I'll put a link to probably the best strain of cannabis that I've ever come across, and anybody I know that had contact with this strain knew how good it was. And I can't recall the name of the article, but it's quite interesting. So I'll put that as a link in the description of this video, along with the piece that we used to produce this video. But these growers are saying we basically subsidize our white market with our black market, and that some legal farms are moving as much as 90% of their product into the illicit market. So they sell 10% through the legal channels because they're all regulated and they have their licenses and everything's legal. But the government is not able to track everything at the level that they need to. So a lot of these growers are able to push their product onto the black market. Remember, that is tax-free as well, right? And that's where they're making their money. And it's quite remarkable. So if California is any indicator of what's to happen in other states, then this is a problem for companies, let's say like Trulieve or Curaleaf, that are vertically integrated. They now have to compete against the black market. Now, I would think vertical integration is going to be the only way forward for multi-state operators to compete against the black market. They'll never be able to achieve the sort of margins that they need to have a profitable business if you have to keep paying people at every level. They need to control that entire supply chain. So we happen to believe, and I'll put a link to a piece we wrote about this, that vertical integration is critical for multi-state operators because owning the entire supply chain allows them to compress margins to compete on cost while still being able to operate a profitable business, one hopes. And then focusing on a single state. So you see Trulieve doing this, and what they're hoping to do there is capture a majority market share and reduce competitive pressure, and also allows them to achieve economies of scale. So if you're an investor in a multi-state operator, which when it comes to the cannabis thesis, multi-state operators in the United States are where it's at. If you're going to place a bet, that's where you're going to do it. Metrics that you need to pay close attention to: same store sales. So you've seen these multi-state operators grow very, very quickly by acquiring lots of dispensaries and integrating them. Now, once the dust settles from that, you need to watch for same store sales. Are sales decreasing as the recession takes its effects? And also pay attention to gross margins. So that would be the revenues brought in versus the cost of producing those cannabis products. So these are key metrics to be watching. Now, when it comes to the overall thesis, here on the left, we've put a list of the biggest multi-state operators in the United States. And if you're going to take a punt, it's probably going to be on one of these companies. And we've invested in one of these firms. And you can see the simple valuation ratio for all of these below 4. And I've put a number of firms here on the right, unrelated, of course, but just to give you an idea of how low these numbers are. So as a rule, cannabis right now is quite cheap. So I believe that the biggest cannabis ETF, it only has 650 million assets under management, it's not very big, has lost about 46% year to date. So cannabis is trading at an extreme discount. And as we look to possibly increase our position, we wanted to have a think about how this bear market and recession will affect the cannabis market. And we think there's some potential problems there. People will keep buying as much as they have been, but they're going to be price sensitive. So all those high margin products that were novelties, people are going to stop buying those, and they're going to be looking for cheaper cannabis, and the black market is going to put pressure on the legal market. So just to conclude, weed stocks may not be as resilient as other sin stocks based on what we've talked about today. And legalization also happens to benefit the black market. So my understanding would be that if you're a black market distributor, it's a lot easier now. You might be able to carry around marijuana in legal containers, which is actually black market, and the police won't know the difference. So legalization has certainly made it a lot more easier to operate in the black market. So if you're an investor, right, the thesis, there's a lot to like there. There's a big market in the United States, biggest in the world. It's still quite compelling, but we need to pay attention to key metrics such as gross margin compression. So just pay attention to gross margin and watch for falling same store sales. And the question is, will we add to our own position? That was a decision that we were trying to make, which resulted in this piece. And Nanalyze premium subscribers will be notified if we decide to add to our position. So thank you so much for taking the time to watch this video. Please put your comments in the comment section. Make sure to subscribe to our channel. And for anybody that actually made it to the end of this video, here's a little Easter egg for you. The weed stock that we've invested in is Trulieve. So please don't let anybody else know in the comment section, but that's where we've placed our bets. And I will put a link to that article in the description of this video as well, which talks through why we decided to invest in Trulieve. So thanks again for your time, and make sure to subscribe to our channel. Thanks.